when you come into the market, you want first to identify a high or a low. For example, on this market, this gold US dollar, you want to identify a high. For example, we can look at this high right here, and a low. So this was the buy side liquidity right here, and this was the sell side liquidity. And you can see the market broke structure to the downside, indicating that the market might be selling, and then it came back and swept this high. Now, when you want to identify a valid sweep, you want to wait for price to trade above this high, and once it closes below the low, below the high, then that shows you that, you know, price has rejected this level, so it might not trade higher. And you can see price kept on falling. So if you want to trade this, you can wait for price to come back to a fair value gap, or you know, you can wait for price to come back to a good area for you to sell. So for example, if you want to trade this, you can wait for price to come, for example, at this fair value gap right here, just after the sweep. And as you can see, the market came up here and it sold. So if you could have entered here a short position, stop loss just above the high that swept it right here. So stop loss above this high, and you can target a 1-to-3 risk to reward ratio, and it could have hit successful. Now, I know most of you must be asking yourselves, why not trade these fair value gaps right here? So you can also trade this fair value gap. You can see this range right here. Once the market, after sweeping the high, it dropped and then came back to this range. When I say the range, I mean this low and this high right here. So once it came back to this range, there was these fair value gaps right here. You can also trade from that. So it depends. So any market, any opportunity that presents itself, you can just take that opportunity and see how it plays out. So for example, you could have taken a short position here, a stop loss just above, let's say, the fair value gap right here, and then target a 1-to-3, and it could have entered perfectly. So that is how you trade these liquidity sweeps successful. Now, I know you must be asking yourself again, why not take a trade just right after the sweep? Me personally, that is how I trade. I just take the trade right after the sweep, right? You know, once this market keeps on going up like this, many people will be reluctant to enter short position after price closes below the high, because they think it might keep going high. But to me, once I see something like this, I'll usually enter on the next candle open, stop loss above that candle that just swept the high. And since my stop loss is small, I don't usually target big. I just target a 1-to-2 or a 1-to-3, and I'm usually out. Now you might be saying, why not hold it too long? You know, trading is not about making big profits. It's about making that small profit consistently, and then yes, that's how it is. So don't aim for the moon, don't aim to the sky. Just take small profit and be consistent. It's better to make consistent profits slowly than trying to aim big and not make profit at all. So like and share the video and comment below what you think about this.